For trucking companies, managing unpaid invoices is not just accounting, it's survival. But once an invoice is 90 days past due, your chance of collecting it plummets below 50%. In an industry with tight margins and accelerating bankruptcies, you cannot afford those odds. Your fuel, maintenance, and payroll costs don't wait. So why should your revenue? Today, we're breaking down the key criteria, the specific red flags that tell you exactly when to hire a professional collector. So, what are the undeniable signs your internal efforts are failing? It starts with debtor behavior. Sign 1, the ghost. Your customer suddenly goes dark. They ignore your calls and emails. That silence is a decision. Sign 2, the stall. You get repeated broken promises. The check is in the mail becomes a weekly excuse. Sign 3, the bounce. You receive a bad check or a failed payment. This signals severe financial distress. Beyond debtor actions, look at your own operations. Is your list of overdue accounts growing every month? This growing backlog has a hidden cost. Every hour your team chases payments is an hour they're not booking new loads. Why is this so dangerous for trucking? Your high fixed costs for fuel, insurance, and truck payments are relentless. That means an unpaid $5,000 invoice is the original loss plus interest on borrowed capital and wasted salary hours. But what if you have all the paperwork? What makes collecting freight debt so difficult that even your best people might fail? The reason is in the details. Disputes over signed BOLs, missing pods, and lumper fees. An average collector is lost here. On top of that, there are FMCSA rules and broker bond claim processes. This is a specialized logistical field. This specific difficulty is exactly where professional transportation collectors provide their value. How much better are they? Agencies that specialize in transportation are not just making phone calls. They are auditors and industry insiders. Remember that unique difficulty we mentioned? This is the answer. They validate claims with BOLs and use a broker's bond. And the results are clear. Specialized agencies consistently achieve significantly higher recovery rates than in-house efforts. Recovering 40% of your bad debt instead of 20% can be the difference between a profitable quarter and a losing one. They flip the odds on that 90-day ticking clock from the beginning, recovering debts you were most likely to lose forever. But recovery isn't the only factor. There's also risk. Debt collection is a regulated minefield. One wrong step means lawsuits. Another risk? Time running out. Every state has a statute of limitations. Wait too long and the debt is legally uncollectible. With trucking bankruptcies on the rise, your debtor might not exist if you delay. You must be first in line to get paid. Many owners worry about damaging a client relationship, but a neutral third party can often preserve them better. So we've covered higher recovery rates and lower legal risk. But what is the direct impact on your bottom line? Remember your staff's time spent chasing payments? Outsourcing that work is a cost-saving measure, not an expense. And here's the best part. There's often zero upfront risk. Most reputable agencies work on a no-win, no-fee basis. This is the key takeaway. Outsourcing frees your most valuable assets, your people, to focus on generating new revenue. The true ROI is a powerful combination. More cash recovered, lower internal costs, and a team focused on growth. The criteria are clear. If an invoice is over 90 days past due and the debtor is unresponsive, it's time for a specialist. The best strategy is prevention. Vet your clients carefully and ensure your documentation is flawless from the start. Don't let unpaid invoices dictate your company's future. Take control of your cash flow and protect your business. Review your accounts receivable this week. If you see these red flags, consider consulting a transportation debt specialist.